to the Smart Property Investment Show with your host, Phil Tarrant.
Welcome to the Smart Property Investment Show. My name is Phil Tarrant. I'm the editor of Smart Property Investment, also a property investor. I'm joined again by our regular guest, Alex Whitlock, who is the group publisher here at Sterling Publishing, works very closely with me on our property investment titles. I've also asked Steve O'Keefe to come back. Now, you might remember a chat we had with Steve about a month or so ago. Steve's a cricketer, plays for New South Wales. He also he's picked up the bat a couple of times for the Australian team, and he's still active and looking to, he reckons he's still got about another 4 years left. High-level cricket, that's right, Steve. Did I summarise that right?
Very optimistic, but yeah, fingers crossed. That'll be a good case scenario.
Yeah, it'll be nice. Mate, thanks again for coming along. Last time Steve came onto the podcast, we sort of had a bit of a chat about his journey with property, why he sort of invests, a bit of his background and how he got into it, and what he hopes to achieve sort of moving forward. Make sure you go check it out. I can't remember the exact number of the podcast, but just go and search Steve O'Keefe on iTunes and you'll check it out. I wanted to pick up that conversation, mate, but we've only got 20 minutes or so we can talk about property forever. You've got a pretty hectic schedule with your job, and I think you said last time was following a little red ball around a pitch and you get paid really good money to do it, and it sounds really nice. So you're on the road, you're here, there and everywhere, whether it's domestic or international. There's 10 properties that you've got in your portfolio, which you've built over a 4-year period. Mate, how do you manage those? You know, it's a headache, my portfolio, to try and keep ahead of it. How do you do it?
The majority of properties, barring say, 3, I think I've bought through buyers agents, which I think alleviates a lot of the stress. So buyers agents, for me, I'll go to them with a brief of what I think is good. They'll bounce back some ideas. We'll settle on something, and then I'll leave all the homework up to them. And once it goes through the process, again, probably the best. I mentioned him last time, and I'll keep plugging him, but Paul at Pure Property has probably been the best I've used because he handled it right from the start, right to the finish. Helped organise getting tenants in place, and for me it was the most stressful thing I've done in the previous history. So I've owned this box of property worth X amount. I've had to do, barring signing a couple of pieces of paper, bugger all. From then on, I've got a good relationship. I use the one bank, which is important for me. May not be important for everyone, but use the same bank. Got good buffers in place, I think is probably the key for me as well. So when things do come up, I think one of the kitchens blew up in one of my properties, and I've got good buffers to cover it, and I've got insurance in place.
So cash wise, so if there's any sort of problems with your property, you've got a bit of fat and you can sort it out. You've got insurance, which is good, but who actually manages your properties? Like, have you got?
I've got property agents as well. So I'm happy to pay that premium again, 7-8%. For me, that's a small price to pay, because when we're looking at the bigger picture, we want these properties that are worth 300-400 grand to go up 3 or 4%, and hopefully in 15 years double. So there's 400 grand. If you're paying that small amount at the start, it's not affecting your cash flow, then I say pay as much as possible. For me, peace of mind, I want to focus on cricket. I'll pay the excess to have these people around, experts, good team, to look after it. And again, accountant is important for me at the end of the year. I go in with a whole bunch of paper. There it all is, Sue, and she'll go through it. Again, you might pay extra for someone to do it, but it's less stress for me. And I'm happy to work that way.
Steve, just on the subject of using an agent to get tenants for your property, a lot of investors think they can save themselves, sort of 6-7%, 8%, maybe even 10% by doing it themselves. Whereabouts are your properties located? I mean, you've got a busy career and you're all over the place, but where are they located? You can't go around finding tenants, I assume, for all your properties.
To be honest, out of 11 that I've owned, I've probably only ever seen 3 of the houses. So I don't really go around and check them out. But I've got, percentage-wise, probably half in Brisbane, 30% in Sydney, and 1 in Victoria and 2 in South Australia. So they're all over the shop. Sort of spread the asset base as far and wide as possible. Majority of them have been off the plan. Again, I've used that, or newly built, just so I don't have to worry about the stress of things generally breaking down. At the start, it can be a bit annoying, if something isn't fixed or a tap isn't plugged in correctly, but the majority, with the newly built stuff, I don't have to worry about it.
So from a tenanting perspective, what's the biggest headache you've had sort of over the years? What's the longest you've had a property vacant for?
Probably the ones in, I bought in Whyalla assuming the Olympic Dam was going to go up a few years ago. That didn't go ahead with BHP, and I probably had a property sitting there for about 4 months, not bringing in income.
What was the rental on that?
It was about $270. They probably cost me $260 a piece, the 2 units, and the rent I was getting was $270. So, I had $500,000 worth of debt there, not bringing in income for 4 months, and at 5%, you can do the maths on that. It can be quite a lot.
Yeah, it is, yeah.
But because I put the buffers in place,
Yep.
I was prepared for it. And I didn't really notice it.
Do you have a metric for that buffer? Do you say, worst case scenario, if all my places don't have a tenant in there, it's going to cost me X dollars a month, and therefore I'm happy to have 3 or 4 months of buffer? Do you sort of have an equation like that, or is it more of I can sleep well at night because I know I've got that cash and I can sort it out, it's cool?
Yeah, no, I do. I'll go through and give myself a rough estimate, and then I'll add another at least 25 or 50% on it, and then I'll sit it there, and that will always be accessible. I think I said last time on the show that any money that I do bring in, I'll pay my house down and suck it back out rather than use the cash on.
So you put that in an offset, right, against the house?
I put it in offset and I pay the house down. So even if it's sitting in offset, to me it's still there. It's still temptation to touch it. So I'll pay the house down, and that's the way that I work with it, because it's stuck in the house. It's there. If I want to get it out, I'll have to go through a big process. So, and the offset is the money that I consider that extra bit of fat, I guess, so to speak, that I can use to. If something needs to get done or something's not being tenanted, then I'm happy to see come down, knowing that the greater good is that hopefully the properties are going up, even though they're not being tenanted.
So you mentioned that the properties that you bought, you sold one.
Yep.
We'll get into that and why you did that. But
yep.
So you've used a buyer's agent, which is good. I'm a big advocate of buyer's agents. I think that they save me a lot of time and heartache and effort, and they can do the job much better than I can. So you've gone for a few. The one you've got now seems to be all right.
Yeah.
I'm not going to give him another plug. How did you go down that path? Were you not happy with the buyer's agents you used beforehand, and therefore you've found someone new? Or
basically that is the case. I felt like probably early on I was getting advice off people with spruikers who had other invested interests. I used one who's a really highly reputable and well-known property agent, and that's probably been my worst property. I bought again off the plan in Mudgee, and I was sort of advised to go out that way. It looked pretty good, the promises of equity and whatnot, newly built in a growing area. And unfortunately, they said that would take probably 6 to 12 months. It's now been 2.5 years and it's still not completed. Builders have gone bankrupt. There's a progress payment on that loan, so it's costing a lot. And just thank heavens that I've got that buffer in place. So at the moment, I think it's $2,000 a month that's coming out because it's nearly drawn down and nearly completed. That's coming out with no income going in. As I reiterated to the agent, I said, you sell me this. I should have read the disclaimer, which basically says that that it's not their responsibility after it's done, which is true.
Yeah, you're just unlucky. Do you think? Is it?
I think it is, and
the investment sounds sound though. Mudgee's not a bad area. It's multiverse economy.
Yeah.
There's all this other stuff going on, which means that the thing should go up in value when it's built, and it should generate a reasonable return in terms of yield to cover the debt and all that sort of stuff. Without
a doubt. And there's no, again, it'll be worth what they said it was worth when it's built. But the issue that I had with it is that if I didn't have a buffer in place, that $2,000 a month,
it'll wreck you.
Yeah, some people can't afford that, and most people can't. So this was my mum and dad, and it was first time buying. That'd be it. They'd be bankrupt. They'd have to sell it at a lot. I'm privileged enough that I can hold on to it while this is going on and look after the holding costs. So
but it's not what you're looking to do. That's not why you're into property, and it's not a situation that you want to be in. Just look, there's a number of some of our regular listeners use buyer's agents to understand, but there's going to be some people out there who don't. Look, you've had some good and some bad experiences. What do you now look for from a buyer's agent in terms of what they can deliver and then in terms of some of the intangibles?
I want someone who, you spend a premium for these people, and I really want to get, my pound of flesh out of them. So, I'll go with...
When you say, what sort of fees are you paying to a buyer's agent? How much they charge you and what do you get in return?
I think the most expensive I've used is about $14,000 for a $600,000 build. So some will go up incrementally depending on the price, and some will have a flat fee of say $8,000 or $9,000. But what you want out of that is generally you want to buy under the market value. You want to see that they've got some wiggle room from where it's been advertised, and you'd like to think you'd save that money up front when they buy.
Okay.
Through their negotiating skills. I want that complete package of getting that place done. The build and pest reports, them advising you on that. Then once it's built, get the tenant in, and then even the follow-up calls a couple of months later, how's it all going?
Make sure you're all right.
Yeah,
yep.
And there are some really good buyer's agents, and I'll continue to use them. The key is up front. You've really got to ask the hard-hitting questions up front. You've got to feel like you can develop a relationship with that person.
Yep.
And that person's not there for your first month and then gone forever,
You were saying just earlier on, sort of had you looked at the disclaimer, you would have seen X, Y, Z. So for listeners who are thinking about using a buyer's agent, what questions would you ask up front? I know you've got a guy who you're using regularly and he's giving you good service. So what sort of questions would you ask of? What sort of pressing questions would you ask of a buyer's agent looking to win your business?
Look, I think one of the things you've got to be careful of looking out for is that you should be able to go to a buyer's agent and say that you're looking at Australia as a market, or you've got a specific area. If they start sort of plugging you into one area that they seem to be keen at, or this is going hot, I'll be wary of that.
Okay.
Because I think that they've sort of got vested interest. You want to be able to see if they've themselves have invested in those areas and what their property portfolio likes.
Yep.
And again, for me, it's about the relationship with the person, and for me,
trusting your gut instinct,
trusting your gut
degree,
instinct, but also say 2 or 3 meetings. Don't just sit there for one and say, right, I'm happy to pay that that upfront fee or whatever it is. Go back and have another coffee, even if it is a month later, and have a chat and say, how do you think the market's moving?
Yep.
We want to be able to get as much out of them without them sort of ruining the integrity of what they're trying to do. But say, look, where you're looking. Have you got examples of what you've looked at in the past? Has it grown? What sets you apart from other buyers agents, do you think? And you want those, as you said. After that, if you can feel like you're getting a bit of honesty back.
Yep.
And also look at, if it is the agent is X, say, look, do you mind if I have a look at other clients that have used your work? Is there anyone I can speak to?
Okay, yeah, good.
That's a really good checklist. That's really sound advice. It sounds like, as you've gone down your journey of buying investment properties, that you like off the plan stuff or new build stuff, right? But recently you shifted a bit to existing stock, and I think you're buying at the moment in Queensland. Where's your hotspot? Where are you buying? You're going to tell everyone so they can nick all your properties?
Look, I'd love to say it's a hotspot, but just Brisbane in general. I mean, if you go sort of, obviously I'm sticking away from the apartments in the inner rings and stuff, but I think, houses in that middle ring, and then I think, Logan and Ipswich I like, not because they're anything new, but I think they've just got sound demographics. To me, those places remind me a bit of where I grew up out west in Sydney. And look, it may take a bit more time to get that traction, but I'm happy with that. And even a little bit north up towards Deception Bay and stuff, I think's, reasonably priced, good yields. Yeah.
Are you a sort of existing stock guy now, or are you going to consider both off the plan and an existing moving forward?
Yeah, I mean, again, things that people don't say you should be doing is buying off the plan because of the tax benefits. But for me, buying off the plan generally should, it comes with its headaches while it's being built, but generally when it's built, you probably won't have to fix things every couple of months. A stove won't blow up, a kitchen won't blow up, that sort of thing. You get the good tax benefits at the end of the year, which I appreciate, which may change, who knows, with this new government legislation potentially coming into place. You get the good tax benefits, and I'd like to think if my property game is the long game, which is 15 years, then in 15 years I'll have a 15-year-old property as opposed to a 30 to 35-year-old property. So, again, I've got a mix of both, half and half, and I'm happy with that. And again, now I'm just going to I think for me it's about debt reduction. Again, I want to minimise risk. I could go harder. The bank would be more than happy to lend me more money. But I think it's about now I want to minimise as much debt as possible and, attack the highest loan, get an offset against the highest loan and start paying it down.
So what's your risk debt profile look like right now? So
in terms
what's
of
your LVR,
dollars,
your LVR percentage across your entire portfolio?
Probably sort of 60-40, I think.
Okay.
So I've 60 in debt to 40, somewhere between 30 and 40. So
which is, some people would say that's really conservative. Some people would think that's really risky depending on who they are. But it works for you at this point in time. Largely
due to the fact that my main principal place of residence is sort of 30%, and I've paid that down and own it. My own house. So, and then the rest is feeding off that. So again, as I said, the bank is happy to lend me out that money, but because I own, my own place and I've paid that down, I'm happy with that. And then the rest I'll choose to pick, and it's that debt's sitting there. I want to attack that as hard as possible. And if something does come up, again, I'll be in contact with my buyer's agent. If something does come up that looks too good to pass up, then I'll go at it. But I'm quite comfortable with where I'm at, given my goal is in the future to have that passive income of 80 to 100 grand.
Yeah, so the relationship you have with your buyer's agent, it's an interesting one. It's in terms of when you invest in property, that could potentially, you're always really close to your accountant, but your buyer's agent relationship's an interesting one. So they know the ins and outs of your portfolio, they know where you are and what you're doing. Do you have like a standing mandate with them saying, all right, mate, I'm ready to buy, I've got approval from bank, just go and find me something?
Yep.
Or is it more of they call you up and say, Or are you looking to buy at the moment because I've got a cracker here? Are you ready to roll?
Oh, it's a combination of both. And I think currently I'm doing the same thing with my portfolio, is having the money ready to go. It's there, sitting there.
So you've got a pre-approval in place right now?
Yeah, it would be. It would take a matter of days to get it sorted. And again, my pre-approval is basically having that money in the offset, which I can lump onto the house, or now that debt's pretty much gone, I can just push straight into another property, draw it back out, whatever. So it's sitting there ready to go. But for me, again, my risk profile is pretty high that I've got myself in so much debt, knowing my career is going to end shortly and I don't know what I'm going to be doing. But it worries me also a little bit that that is a large amount of money. Get it paid down, get your properties bringing in cash, and really you won't have a problem regardless of how the property market moves. So that's basically my mentality at the moment.
And how do you finance each new purchase? Are you refinancing any of your properties, or you just set it and leave it and then wait till you get another little war chest of cash together and go, let's buy? How do you do that?
I generally borrow probably 100 to 105% of each property, which will cover my buyer's agent's fee, which will cover the stamp duty. And so I borrow 105 and I use my main principal place as residence as the cross collateralised. Again, it's pretty risky, that sort of mentality, and for me it works for me, and people will advise you against that, which is fine, and it can limit your growth in some respects, but for me I'm happy with that. So I'll get the money together, I'll put it onto the house and then draw it back out, and they know where the house is sitting and how that's sitting against other properties. So if it's a $300,000 house, then I'll need the 60 grand plus that extra 5% in cash. I'll dump it onto the house, and then they'll use that as saying, right, there's the equity, and I'll borrow over what the property is worth.
You lived out of Manly in New South Wales, and use a local bank branch down there. Who's your lender down there?
Bank of Queensland, Drew and Jody Johnson. And again, for me, it's relationship. Those guys tend to go above and beyond.
And do they have do they speak to your accountant? Like, do you go, you guys sort it out?
Yeah, they speak to everyone for me. The builders that are doing the stuff, if they feel like they're being a bit slow, they'll send their own message, give them a bit of tough love, and say, right, as a bank, we're a bit worried about this, even though they're not. They'll just give them a hurry up from the bank's point of view, and it'll then come roundabout's way back to me, and I'll end up getting an email in the afternoon going, look, we've just spoken to your bank, we're going to try and get this done. We know you're in a hard spot, and generally I'm not, but they've got that sort of leeway where they'll say, right, well, we want to know what's going on.
Everything's moving along as it should do, and it's not sucking up too much of your time.
You've got a team around. You've got your bank that obviously provide you a solid service. You've got your buyer's agent. Your account, how long have you used? Do you have the same account you've used over the years, and sort of what sort of service they provide you?
Well, I use a lady called Sue Wingate, who's Pinnacle Tax out at Windsor, which is Richmond where I use, and she doesn't have a big office, but again, a lady who'll sit there through my receipts and paperwork for hours and hours and hours. Again, a lady I can ring at pretty much any stage. She'll get back to me, and just a lovely lady who follows the law to a T. And I'm not looking for shortcuts. I'm not looking for anything like that. And she'll tell me flat out whether we can or can't do it. And she's upfront. Can be brutally honest sometimes, which is great. And to me, again, personally, I've got a great relationship with her. I feel like I can call her with anything, and she'll help me out.
So you got your accountant, you got your buyer's agent, you got your local bank branch.
Yep. Magazines, got my magazines. I love reading there you go. SPI and hearing the client stories. So, I try to use sources of inspiration everywhere. But my big blocks, the big people in place who look after my cash, who advise me, I guess, so to speak. The other one, which I've failed to mention, is I also signed up to the Destiny course as well. So if I do get properties that I like, I'll flick through to them, and they will look at it unbiasedly and give me their thoughts on it. And again, that's just another reference point that I can use to say, right, well, I'm looking at this, my buyer's agent's looking at this, what do you think? And they can come back and say, well, we think X, Y, Z on it.
So did you do that? Because they do an education program.
Yeah, did the education program with them.
That's under Margaret Lamos, right?
Yep. Yeah. So the one at North Sydney actually is the one that I hooked up to, and they were they're great. They just give you really nuts and bolts sort of stuff. They don't try and glamorise it. They just say, look, you're looking at 10 to 15 years. Don't overdo it. They give you good advice, which you can take or move on. They've got good resources. And again, the people there are really nice to work with, pleasant. I've got a meeting again. I'm not looking to buy, but I'm going to go in there again in a week's time, have a chat, see how it's looking. And, use them as a bit of reassurance. Or if they've got a red flag something, they can say, right, you may be spending more here, what my rates look like, and another independent set of eyes. And if I can afford it, then I'll pay extra to get this extra advice, I've learned in the past, I haven't paid anything and it's cost me tens of thousands on my first property. So why not spend the money up front now to get what you know is going to be unbiased, good advice.
So you mentioned beforehand you've actually sold an investment property at a point in time. Was that just, hey, look, go up in value, cash out, or what was the reason?
I again bought off a plan in Sanssouci, a development in about late 2011, and I sold it probably 6 months ago. Took 3.5 years to build, and I was really stressing out. After 3 years, I'd gone past the sunset clause. You hear these horror cases of properties that have gone past the sunset clause. They've reissued new contracts and bumped the price up. Didn't hear from the developer for sort of 3 months after it had been built, and I'm like, this is you know, I'm going to get rinsed here. This is going to happen. They're going to take a fair bit and give me back, and I'm going to lose out. But fortunately enough, they come through the goods, and I just saw that as, again, like winning lottery. I only put 5% down on an apartment. Didn't have to pay stamp duty at the time, the developer did. And that sort of went up about 40%, as all Sydney did in that time. And my bigger goal, as I went back to before, was to pay my house off. So I went, right, here's a large chunk that I can take now and just put straight down on the house. And if I kept it in, it would still go up. It'd be ticking along. With new builds, sometimes you get the thing, you don't know what it's going to be like in 6 months. You don't know what it's 12 months. The developer took an extra 18 months to build than what he said.
It was probably not a bad thing because property was going up in so much value that, you know, you probably capitalise off the back of it.
Oh, yeah, it was just cash, you know. 20 grand, 5% deposit down, and, you know, you draw your money out, dump it in the house and don't even look at it. And that was my mentality with it.
It's good.
Generally, I don't like to sell, but that was just you know, to me, it was too good to refuse.
Nice one. Mate, we're running out of time. A couple of questions that we generally ask all our guests.
Yeah.
Sort of, I think the property that you got out of Mudgee sounds like probably the worst property in your portfolio. It sounds like it might come good when it's the fundamentals are there.
It's a headache at the moment.
It's a headache at the moment.
If it's built, yeah.
If it's built.
I can't call it a property yet.
What's the best property in your portfolio and why?
Yeah, I think the place that I bought in Manly in 2011, off the plan. I lived in Manly, loved the area, was looking around to try and buy something, saw this one, and again, I had a lump of cash, and originally I wasn't going to live in it, but I had the 10% deposit, and it was going to take 2 years to build, so I put it down on the place in Manly, went and moved out to Coogee, lived with another name drop, Steve Smith, the Australian captain, for 18 months in his house. When it got built, I rented my place out in Manly, and then I saved up enough money, had enough money to put another 10 or 20% down. Thought this is probably going to be cheaper than renting, living in this. So I went back and moved into it. Like the fact of having my own house, and it's probably performed the best at this stage in regards to property. You know, I got lucky buying at that sort of time. You know, the best time to buy property always seems to be 5 years ago, but you know, I bought that at that time, and it was you know, extremely fortunate. I live in it now. I love the place. I love the area. And, you know, not only because it's probably performed the best, it's my best property because I get to live in it and I enjoy. I've got that emotional attachment to it.
That's really good. And if you can go back to the Steve O'Keefe today, who's doing pretty well in property, and went back to before you started investing, way back when, what would you tell yourself, mate?
Well, if I knew what I knew now, I'd be a million. I'd probably be asking the questions. Yeah. I'd be the one running the investment magazines. I'd be a genius, bought up half of Sydney, and I'd be fine. Yeah, look, I mean, in hindsight, it's sort of a bit like cricket. You know, you wish you could have that ball back that you got out on. You wish you could do that. It's things that you wish you could do different. But I've really loved the journey, so it wouldn't be too much different. Again, I've really felt like I've risked it. I haven't left too much in the sheds in regards to what I could have done. Happy that some are not performing, some are performing. And, you know, from learning in my experience, I'd probably say just do that little bit more homework. It tends to be what everyone says, but read the disclaimers, spend that extra 10 minutes. And what I'm doing now by paying experts, so you almost can't pay them enough if they're good enough. They're worth their weight in gold 10 times over if you get good ones.
Nice one. All right, we're going to have to wrap it up. Steve, are we going to see you on the pitch soon?
Yeah, I hope so. I don't know. It might be the story you get back in 6 months that don't have a job and I'm broke. You have another great contract.
It's got his new trolley, you know.
Trying to flog off his Whyalla properties, yeah. Hopefully back on the park. I've recovering from finger surgery, hopefully back in August to play for Australia and Sri Lanka. That's the goal. If we get there, great. If not, back for the mighty Blue Baggers and hopefully punching out some runs and wickets.
All right, go on, mate. Well, best of luck with that. I'm wishing you all the best, and we'll get you back in a year's time and probably catch up and see where you're at. So that's really good. Alex,
thank you very much,
mate. Always good to have you here. Remember, smartpropertyinvestment.com.au. Go and check it out. You can see a few more pieces around the Steve O'Keefe story, plus all the other profiles that we do on the website. We're on social media, Facebook, Twitter, and all that sort of stuff. You can also follow me if you want to do that, at Philip Tarrant. I'm always getting around doing stuff in terms of property, so keep connected, keep engaged. If you've got any questions, either for myself or Alex or any of our guests, or just in general, you can email me at editor@smartpropertyinvestment.com.au. Thanks for joining us. It's been a pleasure having you. Bye.